Hello, good morning, everyone. It's a cold spring day out here in the Midwest. This is the pre-market morning report. Grab your coffee or a beverage of choice, and let's get into the setup for the market this morning. We're going to be talking about oil and stock index futures, the Iran war news update, and also a little metals analysis. Let me move this window over here so we can see the screen. We have the WTI trading about 87.25. We've got RBOB gasoline trading at about 3.02, holding on to the three handle there. We've got NASDAQ at 26,725, a little bit steady after the gap opening lower last night, a little bit of a recovery here. Well, we are getting back into the gap like we did last weekend. Gold took off about an hour ago, was trading about 48.10, is now trading 48.24, slightly higher with a interim high of 48.42. I had Gemini and ChatGPT pull some news stories from overnight. We already knew about the ship that was seized and fired upon last night, so that's kind of old news. The timeline here is that Strait of Hormuz traffic has been disrupted. Sources IRGC Naval Command. Commercial shipping begins diverting, according to Reuters and Bloomberg. U.S. Navy intercepts Iranian flagged vessel. This happened last night. Disabling fire use. Yes, we got that. Boarding and seizure of vessel. Yes, we got that. White House confirms operation. Emergency mediation efforts activated. So they're obviously a little bit worried about what's happening here. This is not the all is well that was being put out and priced in by the market on Friday, where the crude dropped about 12% before recovering to about 85.50. Iran issues retaliation warning. Sources Islamic Republic News Agency. Iran suspends peace talks at 5:45 a.m. 6 a.m. Oil markets react sharply. They actually reacted sharply right out of the gate and have been consolidating ever since. So the initial impulse was higher. The high was made on that opening candle, and it's been pretty much chop ever since. Now the market is spending time inside the gap. We've gone over this in the weekend report. We're going to keep exploring this in later videos with the weekend gap study. So right now the bottom of the gap is 87.75, so we're trading about 75 cents below that. I am expecting that unless the market can regain the opening price here up at 88 pretty soon, that we're going to see some lower prices again. We had a cascade last Monday where the opening was the high and the market dropped all day long, basically. So if that still is the pattern, then that's probably what's going to happen. Let's go to zero hedge real quick and just see if there's anything major. There's nothing really major. Goldman desk warns market now primed for a pullback. Well, of course the market's primed for a pullback. We have a historic 12, 13-day rally in the S&P to the tune of about 800 handles now. So the market is 800 handles higher than it was a few weeks ago. What we basically did a 6-month rally in 12 days. It took several months for the market to rally 800 points, and we just managed to rally 800 points in the S&P in the last couple of weeks. This is historic. This does not happen. NASDAQ is up almost 4,000 handles in 2 or 3 weeks. Now, how is that really possible if we have this major supply shortage and war crisis and energy crisis and whatever it is. What is really going on here? Somebody please tell me how this is possible. We have gold at 48.20. It has rallied over the last couple of weeks. It's up about 400 handles, and not nearly as much as the Nasdaq or S&P in percentage terms, but it's still up pretty good. Crude oil, we could see that crude oil hit the high of 115 around the beginning of the month. This was the war premium high on the initial impulse week of the launching of the Iran conflict, and we've come off significantly. It's going to be another volatile weekend here. Last week's range was $22. So we're definitely going to get some volatility in here in the market, no matter what, either way. Now the price of gasoline has really taken a hit on the news, traded down to 282 last Friday and is already almost back at Friday's high. So crude is not near Friday's high, but gasoline is near Friday's high. So expect prices at the pump to remain elevated throughout the developments that are taking place here. So gasoline is going to remain elevated. Nasdaq here is recovering the gap. It's about halfway back through the gap. It's probably going to hit the high again at some point today. The high is not very far away. It's about 200 handles away, so that can be covered rather quickly in Nasdaq with some decent volume and some conviction by the market participants. We're looking for gold to continue moving up. It is a risk asset. It does trade with the market now. It kind of used to trade opposite the market, but it's trading with the market right now as a risk asset. Bitcoin as well is a risk asset. So the risk assets are moving together. Bitcoin, gold, stock indexes, and they usually move opposite the crude oil right now. So the war news, as the war intensifies and gets worse, the crude oil goes up, the risk assets go down, and then vice versa. The war is getting better, the risk assets go up, crude oil goes down, crude oil goes up, war is getting worse, risk assets go down. It's this usual seesaw behavior that we've seen lately. This is not going to stop. The news headlines are going to keep coming. The war is going to, continue to oscillate from, good to bad to great to horrible to all is well to everything is, we're bombing Iran again, back to the Stone Age. It's the typical, rhetoric out of the White House. It's very difficult to really take some of this stuff seriously until you actually have money that is on the line in the market and the market is doing something crazy. Then it becomes very, very serious. So we've got about 20-30 minutes here before trading opens. I'm going to try and get this video out, even though it is not exactly complete. At the moment, we still don't know exactly what's going to happen. By the time I get the video out, a couple of news headlines could dramatically change the shape of the market. And what I'll do is I'll make a short video, maybe mid-morning or mid-afternoon, to contrast the morning take against the take after the first couple hours of trading, and we can see how things evolve and change in a very short amount of time. So good luck out there today, and I will see you guys in a couple hours, hopefully with some script demonstrations on the next video.